Oh, what's up everybody? It's time for another episode, Ryan in Real Estate. Hope you're doing well. Today, we're talking capital gains. And why is this a subject of point today? It's because everybody's made a lot of equity in this current market. Average home appreciation right now, I believe, is close to $60,000 in equity from just the last year. Not including the last 2-3 years, and some of you own homes for 20 years. Oh my goodness, you're doing wonderful. So what is capital gains? Well, capital gains is the tax that our wonderful Uncle Sam bestows upon us for selling our home and making profit. Whenever you sell your house, you're going to have to pay a capital gains tax, unfortunately. Some states actually have included as well. Add a little more tax to that. Thankfully, Texas is a no state income tax. Here's one great piece of advice I got for you. It's called an exemption. How do you get an exemption? Well, let me tell you how you get an exemption. There's really 3 ways you get exemption. Number 1, you've lived in this home at least 2 years. And by the way, the exemption is this. As a single person filing, you can make it up to $250,000 on the sale of your home. As a joint filer, you can make up to $500,000 on your home without having to pay a tax, as long as you meet these 3 parts of the exemption. Again, the first one being you've lived in it at least 2 of the last 5 years. Number 2 is it is your primary residence. It cannot be an investment home. So it's got to be your primary residence. And number 3 is you haven't excluded this house, this gain from a house sale in the last 2 years period before the sale. But that is basically the knowledge you want to know. Key point is, yes, you made some great equity, but you probably don't want to sell this home until you've lived in it as your primary residence for at least 2 years. But what if you still decide you want to do it? Well, there are some other ways that you can do it. One of those is called a 1031 exchange, which allows you to take the money you've made in this property, put it into a 1031 exchange to buy other properties. But, and there's a big but there, is you will still have to pay that tax. You're just deferring it. You're kind of kicking the can down the road a little bit. You're still have to pay the tax, you just don't have to do it right now. But that is capital gains. So make sure you know that. I'm not giving you any legal or financial advice at this point. I'm purely informing you to be thinking, enjoy the equity. Let the money flow in. Spend the money you want. But just know you're gonna be taxed on it if you don't take those necessary steps. Also talk to your CPA. If you need a good CPA, we'll be glad to hook you up. As always, as I ask, please take a minute. Like, subscribe, hit the bell, write a comment if you have any questions. We've been getting great questions lately, by the way, so thank you very much. And we will see you next time on Ryan